There was a fantastic video you showed me the other day of, the guy in China that's buying it from the local shop. And it reminds us of like people going to Costco, right? And they're buying gold, and Costco is selling a lot of gold right now. I think because people certainly over in China are looking at it as a commodity. Well, they have probably for thousands and thousands of years. They have a long history of that. And a lot of cultures do. We're sort of a little bit more new to it, but you look around the world at all these emerging markets buying gold right now. And I wonder how much it has to do with this, Rob. I mean, we look at this debt to GDP ratio. This is one of my favorite charts ever. We're looking at the entitlement train wreck, the consequences of doing nothing, right? Like you sit by on the sidelines, you're like, okay, let's just print some more. Let's print some more. We get this going on and that going on. Oh, I got to win an election. Oh, I want the young kids to vote for me. So, maybe I can forgive all their student loan debt. I'm sorry. Like, it's going to be a problem. And this is the debt to GDP ratio that increasingly has us looking, frankly, like a banana republic, if you would. And that's, I think, a lot of what is also powering gold. Because if you're some 2-bit country in the middle of nowhere, and you're going to be relying on the US dollar, you're looking at it going, okay, one, I'm relying on the US dollar, which scares me because the US is an almighty power. And like, what if they just decide they don't want to do business with me anymore, right? Like it's game over. So I think there's an effort among many of these emerging market places to say, okay, well, what else can I be in? And there's not a lot else. Like, what are you going to be in besides the US dollar or gold? Like, you don't want to be in the renminbi. You don't want to be in Bitcoin, although we like Bitcoin for other reasons. But, there's some challenges out there. You don't have a lot of places to go.
Yeah, and the BRICS countries, I've been following this as well. The BRICS countries are really looking for a solution that utilizes gold as to create some kind of mechanism for trade amongst themselves. This is something that a lot of that they've been developing. It's not really live yet, but you see all of them all of their central banks continuing to accumulate their gold reserves. It's interesting also, I was taking a look at, so in the past 3 years or so, we've had a massive increase in the amount of federal debt owned by the public, right? And this was, as a result of the pandemic and all the stimulus and all the deficit spending. But actually very little of that incremental federal debt was purchased by overseas investors, whether governments or private investors. So it's a lot of it was out of like this 8 trillion increase in federal debt. It was like 7 was just domestic, which is like a lower ratio versus like 1/3 going beforehand being owned by foreign investors. But when you think about the sources of demand for gold internationally, you do have these central banks looking for alternatives to the dollar, and you also have private investors like in China, doing what people are doing in the United States. We're going to Costco. I think people are spending 100, 200 million a month at Costco or buying gold through other means. In China, they're selling gold in affordable kind of form factors. What also is going on in China?
You have currency, effectively, or it's on its way to becoming a currency. I mean, it's been a currency for thousands of years. Don't get me wrong, but in other words, you're not going out and using gold for anything. But I mean, in China, I think that's fascinating, right? That they're selling it in these bite-sized formations.
And the Chinese stock market has been horrible. The real estate market has been horrible. So people have money in China and they're savers, and they see the gold price going up, and they have a historic connection to gold as a store of value. Mm-hmm. So it's very popular now. So that's driving the demand along with central banks. And it's fascinating
gold prices. I mean, we hit. I mean, it's crazy, right? Because sometimes you would think, this is interesting, by the way. You would think, okay, market's on fire, so that doesn't really mean that gold's also going to be on fire, because it's more competition, right? You can invest in equities or you can invest in gold. Well, what if you can invest in both? Because both of them are on this upward trajectory where, we get the debt to GDP ratio I showed you, got major inflation. People want some security, but they also want to be invested in the economy. Everything's taking off, and it's just interesting to me to see it happen in tandem.
Yeah, it's unusual. I mean, normally the relationship is as interest rates go down, the gold price goes up. Here, that pattern has completely broken. You've got plenty of demand for gold, despite the fact that it's still competing with, your bank account, right? Your ability to go and get 5% by parking your money in a risk free, more or less savings account. Uh, Despite all that, gold is performing really well.
Yeah, it's amazing. 2,400 and change. I mean, wow. I did not. I was pretty. I've always been bullish on gold. I mean, I was telling my mom to buy it 22 years ago when it was like $300 an ounce or something. I've always been bullish on it. And yes, it's kept pace with the economy. It's interesting. You and I looked at the chart last time we spoke, and what we saw was at one point gold prices. Was this about 10 years ago, Rob, or longer? Got so far ahead of the money supply.
Around
So
2011. Yeah.
that's when you saw gold coming down. But you and I were looking at the money supply, the M2, versus gold prices right now. And what you actually see is they're pretty closely aligned, thereby sort of justifying, if you would, right? It's like a PE ratio for gold, sort of justifying, I think, the price. All that said, the more we print, the more gold prices are going to go up. So I guess an interest rate cut from the Federal Reserve, if we get one ahead of the election, would suggest there's more inflation coming. There's more equity upside. There's more gold upside. I mean, these things are actually running together now.
Yeah, no, I mean, if interest rates do go down, right? I mean, that would, in theory, be yet another factor that could potentially prop up demand for gold. It's interesting going back in time too. Now I'm just thinking about copper in that context of, going back to that sort of post financial crisis level, all the inflation that's taken place since then. So even though, if you kind of look at it in real terms, going back to 2010, 2011, the copper price is probably lower at this point from that peak, which is another kind of indication that it's like what you were saying with gold, where it's had a nice move, but when you look at it in the context of money supply growth, it's not extended.
No,
So
I mean, which
maybe
makes me
we're just
feel
getting
good
started. Yeah.
about my own, because I do believe in gold, but I'd rather be in it this kind of level than what we were seeing, as you said, post the debt crisis.